You said something in the book, and I've heard you say this in different podcasts, but that entrepreneurs will overestimate what's possible or what they can do in the first year and significantly underestimate what's possible in the long run. Why is that? I've got all my thoughts on it, but why are you discovering that? How do you talk about that for our guests?
I think one of the biggest things that I learned, if someone was to ask me, of all your experiences as an entrepreneur and as a person, what's one of your biggest learnings? I would say the concept of patient ambition. If you have ambition without patience, you can run right off the cliff. You don't really think about the long-term effects of the things that you're doing. It's instant gratification. I want this now. I want my company to grow now. I want the value now. I want everything to happen now. But if you have patience and no ambition, you're waiting around forever and nothing's happening either. And so I learned this concept of patient ambition partially because when I was growing my company, one of my companies, I wanted to grow for growth's sake. I wanted it to happen now. It was, we had a $10 million company. I remember going to my partners and go, we're going to get this to 100 million in 5 years. Let's go. And by putting that time pressure on it and being so ambitious without really being patient and strategic, I made some drastic mistakes. I made myself and the company vulnerable. And one of those companies that I grew to over $55 million in global revenues, I lost after 15 years of growing it. So if you're listening to this, think about growing a business for 15 years. Blood, sweat, tears, not paying yourself for years, getting your business to finally be of value, and then losing it. Just because I didn't have the long-term game in mind. I didn't have that patient ambition of growing something over a longer period of time that was more foundational. And yeah, that's why I keep bringing up the message that, we overestimate sometimes what we can do in the short term. We underestimate, if you just have a little bit of patient ambition, what you can really build.
Yeah, initially, I think a lot of them that I get, because I love working with startups and everything in between, all the way up to really big public companies. They're making assumptions that they have no idea whether or not they're right. I see a lot of that. It's like your typical startup company hockey stick graph, or you're going into a new market, all these things. It looks great on our spreadsheet, but now we've got customers and people and everything else involved. And then I think there's really big limiting beliefs that we all have about what's possible in the future. And I think it's our job to keep pushing the boundaries of creating value to chip away or modify those limiting beliefs going in. I used to say it, John, and I've been saying this for a couple of decades now, I'm very patient with a strong sense of urgency.
Love it.
So I'm super patient as long as everybody's doing the right work. If they're not doing the right work, then forget patience. Like, we need to change something, right?
I love that approach. And I think a lot of times, maybe when you were saying what you were saying there, we go into ventures, or we go into the new year, or we go into this new product line or service with uninformed optimism. It's kind of like, oh, this is all going to work out perfectly. And I think on the other side, sometimes the financial analysts and us take the budget or the projections and, we divide it by 2 and multiply it by 50% because there's so many things that could happen and we're not sure what's going to happen, And so you get this dose of informed pessimism that turns to informed optimism ultimately. But we go through these cycles every time you start something new or looking to build something new. And so I love this concept of, having patient urgency, as you mentioned, because we also need to move. We need to achieve our 90-day rocks. Our companies work in 90-day segments. We've got to achieve the goals. So we have that. We also don't try and overshoot. And I think that's what a lot of entrepreneurs sometimes do. And they get disappointed when they don't achieve success in the first year or second year of what they're trying to do.
Yeah, when I go and I work with startups, and I took one over about 18 months ago that was a failed kids banking app, and changed the name, we call it Dinner Table. Now we're building a community of families globally raising kids that create value in the world. And we have over 18 months, over 40,000 parents in our community. I think in 3 years, it'll be millions going in. But it's been interesting. There's about 120 investors, and there's all this pressure, tell us what projections are going to be for the next 3 years and all that. It's like, I literally can't give you anything meaningful until we get the foundation in place and we see what's getting traction and the return on how we're pouring gas on different things. Then I can give you a more meaningful projection into the future. But until that happens, we're building this foundation for growth. Now, you talk about that a little bit differently than I do, but I think it's the same thing. What's our foundational readiness for growth? And you're talking, I think it's organizational capacity, right, in your book?
Yeah, it's operational capacity, and it's also cash flow. How fast can your company afford to grow? And that was a big mistake, Lee, that I made. You talk a lot, in your book, the most important number. Um, when you're trying to grow a business, one of the most important numbers at that particular phase, at least for your finance team, should be how fast can your company afford to grow based on the cash flow it's generating? And if you try and grow too quick, well, what ends up happening is if you try to grow 20%, but your cash flow is telling you can only grow 5%, where's that other 15% come from? Well, it comes from banks. It comes from investors. You start losing a little bit of control or equity in your business, or you're indebted to the bank and your balance sheet gets over levered. And so those aren't good ways to grow as well. So part of growing your business appropriately is you're growing with the cash flow that it's generating, right? Even to the story you're talking about, sometimes, we'd all love to have millions of users right now, but are we willing to spend X amount of dollars on marketing, or do we need to grow at a more steady pace so we build the foundation correctly? And I think that's something I spend a lot of time with entrepreneurs and businesses on is, getting the fuel for growth. If I can, Lee, I'll quickly walk through in the book, The $100 Million Journey. I have the 7 principles that you're mentioning. And the reason why I wrote those was really my learning from my big failure. But I took the 7 principles and I applied them to another business that we subsequently grew from 5 million in 2016 to 100 million in 2022 the right way. And so there's growth in that story, but there's also protection mechanisms. And so I'll walk through the principles real fast and then tell me where you'd like to dive in. Principle 1 is protect and grow your equity. And you made a really, really good point. Percentage of ownership is not percentage of control, but people don't quite understand that. See, in my case, the private equity firm only owned 35% of the company, but were able to oust me out of the business. So think about, how did I protect myself in that situation? Did I have my own attorneys looking at things? I know small businesses, Lee, that don't even have operating agreements with their partners today. I mean, there's a lot of reasons you need to protect your equity, but if you believe in yourself and what you're doing, why not buy more equity over time instead of sell equity over time? Earn more of what you're putting your life investment into. It's your biggest asset potentially. Principle 2, build your own capital for growth. Way too many businesses are trying to bring in investors when they should bootstrap this thing, A/B test things, put more money in your winners, build your own capital for growth and fuel your growth. And way too many entrepreneurs look at their P&L and think they know how they're doing. They're not looking at their balance sheet. They're not looking at their net operating cash flow. They're not looking at how fast they can afford to grow. And that's critical to know how fast you can afford to grow. But also, if you don't take care of your capital, you don't grow your own capital, you end up going to banks and investors, and you potentially could violate principle 1 with your equity. Principle 3 is reinvest smartly. And this is what you talked about earlier, which is I'd A/B test things. And if the B test work, I'm going to put more money there. I'm going to kill the A. And you strategically find ways to reinvest the capital you've got into different areas that's going to grow your net operating cash flow. It's going to grow your ability to finance further growth, so you can grow faster because you're reinvesting smartly. And in my case example, as I mentioned, I was reinvesting in bad areas. I was reinvesting in areas that was eating up more cash, not generating more cash. So I was hurting our prospects. Principle 4 is build a culture of entrepreneurship. I'm a big people person, big into leadership and entrepreneurship. And I want the people in my company to treat my company like it's theirs and give them the opportunity to build their own balance sheets for their families and participate in the growth of the business. And there's ways to do that without giving them equity. I think way too often it's like, okay, Lee, be my VP of sales. I'll give you 10%. Oh, yeah. And they start giving equity away into their business. There's other ways to do that. Phantom equity, growth appreciation, but treat them well and lead them well so they have authority and freedom to help run your business someday.
That's an hour podcast right there, just talking about that.
100%. Principle 5 is how to protect the house. Way too many entrepreneurs grow. And next thing you know, there's 99 holes in the boat. There's 100 holes in the boat. You plug 99, the water comes up the other one, right? It's a game of whack-a-mole. There's always something going. As you grow, more situations happen. More HR issues, more legal issues, more growth issues. It's the growth paradox. The more you grow, the more problems you have, right? And you have to put systems in place to make sure you're not putting you and your business vulnerable in those positions. Principle 6 is accessing owner's liquidity. So as you're growing, your balance sheet's growing, your company's more profitable, but how does you as an owner enjoy that? I know so many entrepreneurs that all their wealth is tied up in their balance sheet. It's tied up in inventory. It's tied up in all these different areas they can't access. So they're spending a lot of time growing this business, but they're not enjoying themselves along the way or doing that in tax efficient manners. And then principle 7, which is the biggest one of all, is how do you move from CEO to chairperson? Well, you can't unless you do principles 1 through 6. But if you do principles 1 through 6 properly, you now have a team that can run your business. It's generating the right operating cash flow. You have equity in the business. And you can spend time on other things. You're owning a business instead of operating it. You can go invest in service opportunities, spend more time with your kids. You can go start another business. You can do other things by this idea of owning a business versus feeling like you got yourself a job. But you have to do principles 1 through 6 first. So those are the 7 principles that I have in the book.
Yeah. And there are how many business books out there talking about how to run a better business? More than 10 million. It's a lot. So you've got the principles, and what it comes down to for me, it's how you actually apply it. And I go back to this, this value creation mindset. So even with your 7 principles and protecting the house, I think responsibly, giving people opportunities for equity, do all of that through a value creation mindset, like what we create for the customers. Correct. And how we're building everything else. Because I always thought if I do what's best for the entity, and I've heard you say things like this too, it'll be what's best for me in the long run. It just will be. And I have to be responsible. And it's not maybe something that people will find very sexy to do, but it's like you have to, when you have partners, you have to plan for the divorce right out of the gate in the contract. So when it doesn't work out, thank you for trying. We know what to expect going forward. And it's not this ridiculous blue sky valuations coming in and everybody just coming in for the money and blowing up the team and the employees' livelihoods and everything else. When I think about the change or the pace of change is happening right now, I've heard you talk in podcasts plus your book around, if you thought change was fast around the .com bubble and what was happening back around 2000, today it's even faster. What do you think the biggest forces are going to be that are going to impact that for small, medium, and even large businesses? And I think a lot about small and mid-sized businesses because that's the majority of business out there.
Yeah. Well, I think as we outline in Big Bet Leadership, I think about kind of 3 macro changes tied together with this common thread that goes across all. So the 3 macro factors that we outlined as part of the hyper digital era, which is this era of what I think is going to be exhilarating change, which creates either opportunity and or challenges in your businesses. One is kind of technology, right? And so AI is just one. I think we've really had an exciting just recent era on stable coin, and I think that's going to be a transformative, kind of payments technology, computer vision, the promise of fusion energy. It's not going to stop at AI, but it's kind of easy to categorize them all under AI, and everything, right? The second is the shortage of skilled labor and the cost of skilled labor, which I think is going to hit every business. And, between the declining birth rate and the increasing aging of America, like that's a mega force that's just accelerating. Again, presents opportunities if you can figure out a business that either rides that mega force and or solves for that problem. That puts you in the driver's seat relative to the megaforce. And then the third is just the indebtedness of our societies and the fact that, whether it's an inflationary pressure or a cut in social services or the chaos that I think is not going to stop. If anything, is going to just accelerate from an international standpoint. Like, we are in an era of chaos. And if your plan is, well, I'm going to wait until it's a little less chaotic, I think that's a high risk perspective to have. I think you need to figure out how to plan for that chaos. And then the thread that ties all of those together is the abundance, not just the abundance of investable capital, but it's investors like NVIDIA, Amazon, Microsoft, and private equity firms who have built a playbook that they have high confidence in, of like, how do we actually take on a use case, an industry, a company, and create something new and substantially better. And so, they've learned that playbook over the past, call it 30 years of digital transformation. I think that those are the 4 factors, and there's probably more, but those are the ones that I think about that are going to create this era, which gets to the thesis of Big Bet Leadership, which is not only are we not good at these types of transformations or reinventions of ourselves, but I think this is going to be the skill set of winning companies going forward, is that they have both world-class operations and they're systematic about how they reinvent themselves at a company, at a team, as an individual leader. And I think that ability to hold both of those as mandates for a leader and for a leadership team and for a business, I think is the big change that's needed. Most companies don't think that way. Innovation or reinvention is a sporadic or, part-time hobby for them. They don't prioritize the development of those types of skills. They don't have the clear language or frameworks to differentiate between them. They because there's some common words between the two of them, they think, oh, just because I'm a good operator, I know how to run a program in the reinvention half of my playbook, and flat out you don't, right? And history demonstrates that fact. So those are both the forces that we're talking about, as well as the mandate of building your, we'll call it reinvention big bet playbook to complement your world-class operating playbook, which still needs to be strengthened and operate and built upon. Specifically on supply chain, in this era of kind of chaos and dependencies, thinking through kind of back to this AWS story of like these single-threaded supply functions, and how do we design in flexibility, anti-fragile capabilities, redundancy, like all these good things that survive a bad negotiation, survive a bad outage, survive a tariff, survive, whatever it is. That's the proactive way of figuring out, how do I take advantage of this chaos that not only are we in, it is always going to be here. If anything, it's going to be more. That's what a really good forward-looking leader thinks through, is how do we build those in, and at what pace do we invest in building that?
And when it comes to agency, something that stands out for me in your book, the outcomes thinking, it's been a big part of what I do forever. It's like, here's what we're going for. Let's make this happen. And you've got that wonderful example in the book about the senior leaders disappointed the janitor didn't empty his trash. Well, the locks were changed. I couldn't get in. Okay, that's reasonable. But for a senior leader, what you want to hear is, I took the hinges off the door. Of course, the trash has changed. What are you talking about?
Right.
So getting
and I swam way outside my swim lane of accountability of job definition in order to do that. Right, like they don't pay attention to job definitions, and that's kind of the story of a famous rant that Jeff Bezos gave me, and everything was so I got to launch the marketplace business at Amazon in 2002, and he gave me a rant one time about, like, although your job is director of merchant integration, I want you to operate like you run this business. But it wasn't just me he was pointing out. He was talking about everybody that needs to think bigger than just your job at a senior level. And that's the type of culture and heads up play. And that's real partnership, is when you get other people thinking beyond just their little scope, then you can role play, you can syndicate risks and issues, you can truly pressure test each other's thinking and plans, and you truly become a coherent team that can accomplish anything.
Yeah, I always shoot for an environment or culture where every single team member is the CEO of their own role, and they think about it, they live it that way when they come in 100%.
I agree with that, but so this is an and.
Yeah.
You have the confidence and the willingness and a place where you can challenge others in their perspectives, right? That's how you actually pressure test ideas. And these big ideas always happen across the enterprise, right? They're never in a nice single, team or organization. And so if you can create an organization that where both I have high accountability of my function, my job, as you were saying, like, I'm the CEO, I run this team, but I also think big, I think like an owner, and it is expected of me. It's not just allowed, but it's expected of me. If I see something that raises a concern relative to the overall mission of what we're trying to accomplish, you play your cards at the table, right? So one of Amazon's leadership principles is, so I wrote a book called The Amazon Way about Amazon leadership principles. And one of the leadership principles is have backbone, disagree, but commit. And that leadership principle in particular is about this notion of you have to be active at the discussion table. If you see something, whether it's your job or not, your job is to challenge, is to ask a question, is to push back against something. But once a decision's made, we all lean forward to making that as successful as possible. That's a high functioning culture and team.
Yeah, I think that's great. My experience, the bigger companies get, there's silos that start to really form. There's empire building. We're going to charge all the business units so we can support this function, engineering, HR.
And passive aggressive behavior where people don't actually speak their mind in the meeting. They work it behind the scenes, after the scene. It's like, I wasn't convinced that was there. We suggest one way of addressing this in Big Bet Leadership, and it's about how to bring the best out of senior leaders when you're proposing a concept. And the problem is like senior leaders show up to a meeting, you bring a world-class PowerPoint deck presented by a compelling speaker, and who can resist that? Who can say no? And so what happens is the senior leaders kind of like, yeah, I'm not sold, but I'll go along with it for now. And later on, they show their risk, they show their concern, they show their doubt. Well, the way to set a better environment is to write what we call the 3 futures memo. So instead of a fancy PowerPoint, you write 3 memos about the problem you're solving and a realistic future state, highlighting the differences between them. The senior leaders have to read them. And then you ask the question, well, which one of these 3 would you recommend and why? And what would have to be different about the other 2 to make that the recommended path? Now you're asking them to, you're giving them much more discernible information to reflect on. B is you're actually asking them and helping them tell you what they don't believe out of what you're telling them, right? And so it's not a selling moment. It's a syndication moment where we're syndicating and sharing a potential and what are your real risks. You're asking them to do their job, which is to share their experience with you early. Guess what? When you share a concern or an issue early, we can deal with it. It's when you share it late, we can't deal with it anymore. So that's one way to address that challenge of how do we have these hard, vital conversations early and actually share our concerns. Hey, write a 3 futures memo, and that will drive a different conversation.
So I go back to the largest company that I've started and sold. I sold it in 2016. It was called Able Aerospace, and we grew from nothing. Myself and 2 others that agreed to work for free for a year until we could afford to pay ourselves, and it worked out really well. But fast forward 23 years later, we have over 500 team members. We have 2,000 customers, 60 countries. In that space, we were safely reducing aircraft operating costs. And basically what we did was help our customers safely transport people and packages while reducing operating costs. We'd save them a couple $100 million a year over the next best value alternative. Everybody knew us. Our competitors, billion-dollar players out there, couldn't compete with us. And the thing that we did is we leaned into the community everywhere. Like at the trade shows, we were the most attended, hospitality, suites, booths, parties, all of that. People didn't come as an obligation. They came because they had fun, and we're flickering the lights at 2 a.m. to ask people to leave. So we weren't intentionally doing doing it the way you talk about. What do we say? What do they say? What do we want them to say? What do we want them to remember and repeat? But they were all repeating a really good story about that. And so I think for us, it was leaning into the community everywhere. We had amazing people wanting to work for us. Customers talked about us. What does that tell you as I kind of go through that? I feel like we were doing what you're talking about, just not as intentionally as you go through in your book.
first of all, I think you were, nothing to do with the book, but you were intentionally doing that because you were saying, hey, look, we're able to not just attract people to who we are here, but to keep them here. So we're doing things for them in their presence that they're going to remember, and remember positively. And if they have the chance to come back and do it again, they're going to come back and do it again. And that's a lesson that the overwhelming majority of businesses have never learned or stopped to think about. And I'm glad you used the trade show or expo example, because sometimes if I'm at a big meeting or a convention and I'm out there with some CEOs or corporate leaders, I'll say, let's go have a look at who's failing right now. And they say, well, why would you want to do that? I say, because it's so obvious. You just need to know what to look for. And you enter a trade show environment and you see exactly what you're going to see. Fantastic products, well lit, wonderful booths, bowls full of candy and treats, and people sitting in those booths or standing in those booths, greeting people as they come in, and immediately lapsing into, what may be a somewhat rehearsed 3-second, hi, thanks for coming in today. Were you interested in the new, Velociraptor TRP hydro lifter? Sure. So, here's the brochure. And then they walk on to the next one. And you say to the CEO, what just happened here? Because let me tell you what just happened here. Absolutely nothing just happened here. The guy got a brochure and saw the product. And guess what? He's going to walk 2 booths down and see something that looks pretty damn similar to what he just saw here. He or she going to hear the same little spiel about how their Velociraptor thingamabob, has the highest levels of quality and the lowest tolerances for, or the highest levels of, product integrity tolerance and all this other kind of stuff. And so what is somebody going to remember when they're back in their office? Think about how much money is being wasted here, but they're all going to come back and tell their boss, oh my God, we met with, 1,000 people. And they really love the new stuff, and the feedback that we're getting is good. And that's great. We're going to go to more of these shows and piss away all our money, accomplishing nothing versus you. They liked you as people, or they wouldn't have been there. If you're having to turn the lights off to get them out of the room, they like you as people. And when they like you as people, and when they think of your business, the first thing they don't think of is the product or the service being sold. They think of the person, the people behind it. And that's when you're rock solid.
Yeah. And that's always been what's most important to me in all of my different companies. And I think for all the stuff I'm even doing today, there's even more work we can do around what we want people to remember and repeat. So, thank you for the book going through it. But talk through that a little bit. How you've worked with a lot of teams. How difficult is it for them to be super honest around what they say about themselves, and then finding out what customers are saying, and then crafting what they want them to say, even if it's not who they are, but it's what they're going to grow into?
Yeah. Well, first, just for a tiny bit of background on my first day at Harley, I was, thinking about how are we going to get people here rallied behind anything. Business is teetering on bankruptcy. The world at large views this as abhorrent. The media is printing the company's obituary. 40% of the workforce has been laid off. Morale is terrible. It's a smokestack industry and a smokestack town. So I sat behind my typewriter. I always like to pause after saying typewriter just because it feels fun coming out.
One.
That kind of dates me. And typed out 3 questions. What are people saying? What do we want them to say? And what are we doing to get them to say it? And kind of tacked it up in my office and then out in front of my office and watched as this thing started to migrate as it was used in more conversations. Look, we need to get people to think of this business the way we wish it to be thought of and spoken of. And right now they're not. They're saying everything they're saying about us is negative or is tied is only about the product. They make motorcycles. That's not right. So does Honda. So does BMW. So does Kawasaki and Suzuki. And all really, really, really good product. So we need to stand for things with the people that we serve and hope to serve that transcend product. And what would happen is we would get into meetings with CEO and the CFO, marketing people, communication people, engineers. What would you want people to say about, and God is my witness, like 100% of people say, oh my God, they superior quality, great quality products, great reliability, great rideability, great commitment to customer satisfaction. I said, if you saw those words on a piece of paper, what business would you think that was defining? And everybody say, well, us. So I said, that defines every business that existed on the planet. And people would not immediately see the bigger picture here. Well, this is what we do. And if we do it better, hearts, minds, and dollars will come back our way. And I said, tell me of a time when that was true, of a business that did that and pulled it off. We need to stand for things that are different than the businesses that we're losing to, because their names are more famous or equally certainly famous to ours, and their products cost less, even though they're really, really good. In a lot of ways, superior to what we are doing. So what's our argument then? We have to be more human in our approach to everything. We need people to like us because, and then this was the one of the great kind of discoveries for a lot of people was, because so many people out there have Harley's name tattooed on their bodies. And God knows lots of Harley employees have that logo tattooed somewhere on their body. The belief was always that those tattoos are emblematic of people's loyalty to our motorcycles, to our products. And I would always, that's the thinking that has bankrupted this business, that we're here to do something and make something. Because we've been making it for a long time and nobody's coming around anymore. Right? People aren't loyal to products. They're loyal to the people behind the products, behind the service, behind what's done here. And we as a company, we've disappeared. We're not visible. We're not involved. People have no idea of the passion and the commitment and the energy and the soul of this business because they haven't seen it. All they see is the product going down the road. And so they judge the business based on that. And what you could start to see slowly at first, but from the CEO who became a huge believer in humanology and being a more human business, this kind of nugget, there's something here. Let's keep doing this. Let's find ways to be more visible. Let's find ways to be more, so people can see our passion and our commitment. And at the same time, I was pushing so hard on this, let's create a vernacular for this business that none of our competitors could have or would even think about using, which means we're not going to talk about quality anymore and commitment to customer satisfaction. We can if you ask, but if we're leading with that, we're commoditizing ourselves. We're the guys at the trade show handing out the brochure. And trust me, that took a lot of convincing to get, at least initially, to get people to bite on this notion that our product is not going to be the savior here. We are. Putting the human face on this business is what's going to ultimately make us more competitive.